The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, and Friday, 11 o'clock till noon. Tiger Technicians Hour, 877-927-6648. Giving the number out real early, straight away. Also going to give the international number, 1-727-445-1044. That always sounds like a tax form, 1044. I'd love to hear from you. This is a great time to be having a show, the beginning of the year, beginning of portfolio managers thinking about what to do. Got my charts yesterday. I said I'd get to the IBD. I never had a chance because we got some calls. I'm going to go straight into it. Thank you both, Steve and Daryl, for just 2 great hours there. We have programs all the way through. I always forget to do this, and I'm determined today not to do it. I'm going to say it right away. I should say just before the end of my show. I always forget. I have it all ready to say, and then because we're rushed at the end, I just wrap it up and I say, here comes Nico Dahan. But Nico has a fabulous newsletter, a really good newsletter. Check it out. It is a wealth of information. We talk about wealth, thinking financial, but there's physical and mental health, and that's really what Nico gets to. So hopefully I'll be able to say that again just before the show starts at noon. But Nico Dahan, I have to congratulate you. You've done a great deal of work, and your newsletter is always outstanding. And I don't know where you. I always think that I don't know where I find the time to do the amount of work that I do. I don't know where you find the time. That's a lot of stuff. Anyway, well, let's get to it. We got program all the way through the day today, and I'm going to start right off saying, after a spectacular move in the Dow, going from the 12,890, was it 12,883 level on the 31st of December. The Dow soared all the way through to 13,430. Yesterday was a high. That's a huge move. You would expect the natural inclination would be to short because you think, after a move like that, it's got to pull back at least 30%. No, the market is holding in. Oh, you'd say, no, wait a minute. The euro and gold, you remember euro and gold and the market tend to go together to the upside. That was, I wouldn't say the tradition, that was historically what was happening for a great deal of 2000 and some of 11 and 12. Well, remember the sell signal that I had on gold at peak F top in the ChapmanWave, both in the peak F in the GLD, the gold Spider Trust, and the silver ETF? We're looking at a smash to the downside in gold, and the dollar's running. Wait a minute, when the dollar rallies, the market's supposed to tank. You cannot say things are different this time, except when they're different. And as of today, things are really different. Bonds are down sharply. The TLT has had a huge pullback, and it looks like it's at 100, and the TLT is at 117.5. Looks to me like it's going to test 112 to 108 over the next coming weeks, even though the Fed is still pumping money. And I'll explain that right now because I'll explain it later on and I won't get to it. My concept of the whack-a-mole that had been going on with the dollar and could still be going on with the dollar is that the Fed has made it a tacit policy to keep the dollar as low as it can and as long as it can. It might be running out of time, but up until now. Now they've got, they're doing 2 things, as if one wasn't enough. They've got 2 things on their mind. They're going to keep bond yields as low as possible. Well, within the context of low bond yields, you still could have a lot of wiggle room. We've been there before. So you could wiggle around. You could wiggle around between the TLT, up in the 130s down to the 112s, 108s, 105s. That's still very low interest rates. So got that out the way. Thank goodness. I also remembered about Nico's beautiful newsletter that I always mean to talk about. All right. What I'm going to do now is I'm going to go through the numbers. The Dow is up 0.58 to 13,391. I'm impressed. I'm impressed, but let me tell you, if you use the tools, if you use your Sears and Roebuck, remember it's not Sears Holdings, it's the old Sears and Roebuck, the big toolbox, that heavy one, filled with all the tools that I keep employing in my ChapmanWave newsletter, the opening call, and in the technical charts we look at. If the volatility index goes under 20 and stays in the teens, it is buying pressure. If it holds in the 20s, it is selling pressure. Make it simple. I'm keeping it simple until that rule is negated. That's what I'm looking at. The volatility index is at 13.92. Let's look historically quickly to see what does that mean. The VIX is at 13.92, the low of the day, a low of the week. 1330 was the previous low. As long as it remains under the 9-period exponential moving average. What the heck, 9 period? One line? How can one line? This is called the 9-period exponential moving average. It follows very much the differential, 9-period exponential differential of the MACD. And as long as that line is underneath the MACD, the slow moving average red is above the yellow one, it means there's weakness in the VIX index. As long as the VIX is flat in the 11% area, it is flat. Now, here's what's very important. The Dow, INDU, and we've got callers waiting, so I'm going to go through this quickly. The Dow has parameters like this. If the Dow closes underneath yesterday's low and does it for 2 days, that's negative. We're going down to test 13,254, the 9-period exponential moving average. If it breaks above yesterday's high of 13,430.60, even by 1 penny, and holds above that, closes above it for 2 days, it means we're going higher. 120-minute chart has only gone to leg C in the Dow chart. And the MACD and stochastic are really powerful still. That's why I don't want to short anything too quickly here. Or if I do, I want to know that it's in a sector that I believe is weak, and I've got a real tight buy stop. Okay, so let's go on. And we're going to look at the S&P. The S&P is down. Oh, it's up 1 at 1460. 1456, I'm sorry. Somebody must have said, what? SPX.X, let's get this done. SPX, same thing. It's leg F/A in the daily chart. This is going to, if this decisively breaks above 1474.51, the monthly goes to leg C. G/C, I still have to keep it there until I get confirmation. My preference is to call it C, and then we're going up, and we can't get a peak D until March. How about that? So now let's go on with the numbers. We've got the comp index. Let me just do the Qs. I'll get this done. There we go. 1, 2, 3. The comp index is at 66.65, having made peak D. If there's no new recovery high today, if it doesn't go above 67.34, this is leg C in the weekly chart in a very quick A to B to C. We're going to see if there's a quick leg D, and that would say, okay, be careful. In 2 weeks' time, you got to be careful because there could be a sharper pullback. The monthly chart is still in the rising wedge, and it's above the 9-period moving average, which is at 65.13. So far, so good. We've got gold down 26. It was down 40 at one point today at 1647. Silver's down 81 cents at 29.91. Platinum's down 7. Now, high-grade copper is down 2.10 at 369.60. I'm watching this real closely. I haven't got any opinion yet other than to say it's in a trading range, a fairly narrow trading range. And bonds are down 30 seconds at 144.03. I will go through some of these a little later on. As we wrap up, I'll try to give the parameters to watch for. But in the meantime, that's it. Let's go to our first caller. We've got Mike in New York. Hi, Mike. How are you doing?
Good. Herbalife. You have...
Yes.
Bill Ackman, who's shorting it, and there's a fellow named Chapman who's long Herbalife.
I
And it's
heard
fighting
that.
him.
I saw that. In fact, I saw the name pop up yesterday on the screen on CNBC, and I even had to listen to what they were saying. Of course, I only listened for about 2 seconds, then my mind went right back to my charts, and I didn't quite hear what they said. But the gist of it is that Ackman and many others are short Herbalife. They're short from many levels, and this guy came in, and he's been buying, but my suspicion from if I read, I love to read between the lines. My suspicion is that he maybe is just barely starting to make money because he started to buy back. I think I might be wrong. I don't have the numbers, but just a little bit that I heard. I try to put the whole thing together. If I'm correct, he's been shorting all the way down. Well, all the way down means I was early and I kept shorting because I believed in it. And therefore, my suspicion is that his average cost price is either right here where we are at 36.58. This is the guy who's long. And I would not be surprised if, in fact, it is at about 37.50 to 39.50, his average price. This is just my suspicion. So now let's look at the chart. Got that out of the way. We've got huge shorts. We've got huge longs. There's a price that I look at. This is Herbalife, HLF. It's trading at 36.59, up 24 cents. On a very short-term basis, I've got this as ABC. I just needed to check here. I believe it's correct. D, E, a little double top here. Maybe it'll make an F. I suspect that on a very short-term basis, this particular rally is over. And how it tests 33.85 is going to be very interesting, because if it takes it out very quickly and it then takes out 29.78, it says, there's more bad news to come. But let me just do something real quickly. When you have a fight going on now, I hope Brian from Franklin is holding on as well. He also wanted to talk about HLF. Isn't that a coincidence? Because I'm going to talk to you about one particular aspect. I'll talk to Brian if he holds on and talks to me about what he's doing about another aspect. And what I'm looking at here, do you have a position at all?
Yeah, no, I've been shorted for,
You've been shorted for a while, though, but you don't have any recent position, right?
Right. No, I don't have any recent position.
Okay.
The thing that intrigues me is now the weekly is rubbing up against the 200-day moving averages.
Very close, correct. And that's what I was going to talk about. Now, let me just do something else. When you have a real fight going on between bulls and bears, my inkling is always to say, you know what? There are other fish to fry. It means that... do you really want to be caught? I suspect because of this that it's going to be in a trading range between 39.70, maybe 40.20, maximum the upside, and 32.10 to 29.70, somewhere there on the downside. So I'm going to recommend that, because anything can happen, that the best thing to do, because you have the stock as a short, you don't have any put position or anything like that, correct?
No.
So you've got time in your hands. Everything that everything that I can look at historically in stocks like this that I've seen tells me that this is going to make lower lows at some point. Hold on, and I'll get back. We'll talk a few specifics as I get back. Hold on.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We are back. Basil Chapman, Tiger Technicians Hour. And just real quickly, I've got in the den, Bob, I don't know if you remember, we were talking about this, I can't remember, was it yesterday or the day before? We were looking at the NQH, the NASDAQ E-mini March contract, and I said the 120-minute was in a very strong move up. It's gone to a C. There was a thing that I call, it's not on the CD. I do talk about it. There's a moment where I do discuss it, but the actual the construct that I use over the years that has been developed came after the CD was made. But I talk about the ChapmanWave squash pattern, and I spoke about the stochastic and MACD, and taking it, the torque takes it to peak C, and that there should still be a D. And lo and behold, in the NQH13, we got that peak D. And Bob in the den says, "Good morning, Basil. The NQH 120 did make a peak D, just 3 points short of a 1.1272. Remember, he's using expansions as well, Fibonacci. It was a long bar down that formed it, so I waited for the 0.618 retracement of leg A this AM to sell at 2734.5. Love your sister. I'm getting redundant saying that, but it's a fact. I mean, it's just, I can't believe how many times I do the 120-minute charts and they go to D, E, and then they pull back sharply. Now we're talking with Mike. So, Mike, what I was looking at is I did a quick thing on Herbalife, HLF, for the 120-minute chart, and basically what I've got is leg E is still quite strong. It's holding the 9-period moving average of 34.69, but there's a left side, right side price time match that goes to a particular bar, doji candle back at 4 o'clock on the 19th of December. To me, that's going to be real key. If it powers above 38.27, when I say powers, I mean it goes in the 120-minute chart. That's not like a daily. So powers would be in 38 to 38.56 or something like that. That'll be very good action. And then 42.79 would be the 200-period exponential moving average. Everything about it says it's getting a little toppy right here, and it should be pulling back. So my only thing to say to you in terms of your position, it's great that you have a short position and not an option, because it might take a while for this to play out. My eye says that the Roman candle that was made in the monthly chart yesterday, last week, between 47.45 and the low of 24.24 will, and I'll go through this with Brian in a moment. If it breaks into anywhere into the 29 area, 29.30 actually or lower, it's going to not just retest the low, but it's going to go to 21.72. So this will be a very important moment for it. So I hope that helps you.
Yeah, great. Thanks.
Thank you very much. Now we're going to go to Brian in Franklin, Massachusetts. Hi, Brian. How are you?
Hey, Basil. Happy New Year to you. Thank you.
My pleasure, and a Happy New Year to you, of course.
I'm looking at CMG again. I know you shorted it, and it looks like it went back to $300 on very, very late volume from the 240 mark. And I looked at it on the weekly and the monthly, and it seems like it seems like it got back to that level at, on much later volume. I'm just wondering what your thoughts are, please.
So this is you and me are both looking at this as another short coming up, right?
Yes.
You don't have a position yet, though.
No, I was actually looking at earnings come on February the 5th, and I was thinking about waiting until around that time to buy some puts.
You see, when earnings come out the first time, it's a shocker. And we were very fortunate in my opening call. We had been short CMG. In fact, we made, I think it was an 85 point profit on it. But that's not the issue. The issue is that you've got to get out in time. And I'm actually trying to, I don't know if I'm going to do a paper on it or what I'm going to do, but I'm making a note of stocks that have gapped down huge and then not only fill the gap, but they have a full-blooded ChapmanWave buy signal that goes to a buy mode to a peak DOE. And this is exactly one of those. The gap down on the 18th of October from the low of 283 down to 252 was the high. That gap has been filled. It took a long time, but now it's slowly filling it, and it looks like it's trying to worm its way. It's at 302, folks. We're looking at CMG, Chipotle, Mexican Grill. It's at 302.33, and it really looks like it wants to get to the 313, 314 level. That's where the 200-period exponential moving average is. However, if it starts to fail without getting there, it's saying that line, just as it was, a perfect, absolutely, folks, if you're looking at Tiger TV right now, look how perfect at 351.8. Oops, I didn't mean to move that. 350, and there was a round number. At 358, 351.80 on the 17th of September, Chipotle CMG was in leg D. It had an opening, it had a low of 338, always a clue to be careful. It hit that, touched the 200-period moving average. I'm not even sure if it touched it, and then it got repelled. So now we're looking at something else. It's like a little bit of a magnet coming back again, but my suspicion is it might not make it there. So it's a great question. Give me a moment, Frank. We've got a break coming up. As soon as we get back, I will talk about it. Plus, there's some questions in the den about stocks. I'll be right back straight after these messages. Dow's up 5.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Folks, we're back. So we are looking at CMG. Got a lot of questions still to come, so let's do this. CMG has made a peak E in the daily chart, and it's been walking the 9-period moving average. Look how you can use these technical indicators. Look at the fast moving average of the MACD, the moving average convergence divergence, MACD. You see the red line? You see the green line? Not once did it cross negative. So far, there is not yet a sell signal on CMG. The stochastics at 85%, and it is starting to weaken, and the on-balance volume is not confirming the rally. That's partly because of the intense selling that we had seen. That's just the way I'm reading it. However, in the weekly chart, there was a peak E top at 442, and it's come all the way down, and it's holding the 200. It held the 200-period moving average of 248. The low was 233.82, and then it closed above the 200-period moving average. So far, this is looking very good. It's in leg C, and a fairly quick A to B to C. And the monthly chart tells me we've made a hat-trick top. Well, it's a hat-trick top because we've already come back down so sharply from the doji high of 442.40 in peak F, which is that's the one you want if you're ever looking for major tops in a market. If you can get a peak F top with a hat-trick top in the weekly and the daily, it's amazing. So I suspect that this is going to be a rally that fails, but I'm going to make a suggestion here that you have a little patience. If it gets close to if it doesn't take out 306.73 by Monday afternoon or Tuesday morning, but instead it starts to slip to 300.06, would you be going in a put position or would you actually short the stock?
I would buy a put.
Okay, you'd buy a put. And you say it's February that you have to wait for the earnings report, right?
Yeah, I would probably wait, closer to February 1st to see, because I know if the stock does go up and the put's going to lose its value, I think I'd rather pay a few more dollars and see how it is.
Absolutely. Okay, we're on the same page. I'm going to recommend don't do anything just yet. I think you're going to get a really good opportunity to at least put on the trade. Whether it works or not, you and I know it's very hard to say when you come out with earnings. I'm not sure this earnings is going to do the same sort of thing as it did last time. But I suspect that the end result a week later is that Baidu will probably be much lower than it is at the time of the earnings report. So how about this? Let's put it on. I've got it on my watch list. You've got it on your watch list. I've got it with Panera and a couple of others in the restaurant area. I would hold off right now, even though there could be a quick trade from 302 down to 296. The weekly chart is looking just strong enough right now for me to say, hold off. If you're going to be using options, let's try to time it much more precisely. I've got my eye on it. It wouldn't even hurt, even if we don't put on any kind of trade. But give me a call sometime, maybe Tuesday of next week, and let's see how it's doing, and then I'll get a better sense of what kind of put you can, when you can put the put on what price. Okay.
Right, have a great weekend, Basil. Thank you.
Thank you so much for calling. I appreciate that. And let's go to Frank in West Palm Beach. Hi, Frank. How are you?
Hey, how you doing? Up here in Boston, Basil.
Oh, wait a minute. Did I get that wrong? Wait. It says West Palm Beach, but you're up in Boston?
Yeah, I wish.
Oh. L.
Yeah.
You got the guy in the wrong place. He wants to. Oh, this is the wish list. Frank wishing to be in West Palm Beach. Okay. So you're in where in Boston?
Outside Lexington.
Ah, you're in Lexington. Okay, very good. So you wanted to look at Baidu?
Yes, that's right. I've been short since about 100, and I got caught in a pop here. And I'm wondering if I should get out for now and get back in, or whether I ought to hang on and sweat it out here.
Okay, now I'm going to talk about this. You've probably heard me do this before, but I'm going to, first of all,
sure.
I don't have to give you the lecture because you know it by heart. It's been going through your mind every hour of every day where you said, geez, why didn't I get out with a profit, right?
Right.
So just explain to me, were you short from October into November?
No. In December, I went short. I simply drew a trend line down from the August high down through the October high, and when it hit around 101 there in mid-December, somewhere in there, I went short. And I was doing okay, and then it popped up right around Christmas time. It came back down, and, of course, now it's falling the market up to a high here.
Okay, all right. Now, I'm pleased we went through that because, one of the things that I tend to, I really just don't do it anymore, but I used to do that, like everybody else. I'd have a stock, and I would think it was going to go one way, and no matter what happened, I did the analysis, I did everything just great. It just didn't seem to listen to me. Right. So when that happens, I'm very, very strict. In fact, 13208, 13200. In fact, I'm so strict that maybe I've gone the other way so that in my opening call, in fact, I got an email here. I had taken it that we were stopped out of a particular position yesterday. It wasn't one that I personally actually had bought. I just didn't have time. Nothing worked out that I could do it. So I didn't. I had to go with the price. But a number of people have said to me, we didn't get stopped out at the low. It must have just touched it and bounced right off. So they're still in this particular position, and right now they only down maybe a couple of cents, and it's acting very well. So I tend to make fairly tight stops, and I'm really strict about it. So occasionally what it's done is we've had fantastic positions, got stopped out for a tiny gain or a tiny loss, and then it's just taken off. But that strict discipline has also saved us from I'm not going to say we never take a huge loss. Anything can happen at any point, but I've done my absolute best to make any losses very small, because I believe a couple of small losses can easily be made up. So I wanted to just go through that with you, just to say, look, next time you put on the position, especially a short position, because a short position means that it's unlike going to an ETF, an inverse ETF. With a short position, you have to come up with the dough if it's going against you. That's a little bit of a different ball game. So now it's not a big deal. It's only 103.16. You in just under 100. This is what I'm going to recommend to you. It's a completely different scenario to what I would have said if you asked me right now, what would you do with Baidu? First of all, I believe it's made a hat-trick top in the monthly chart, with that peak F top in the daily, in the monthly at 165.96. It also had a 135 round number opening, a good clue that if it never broke above 135 after pulling back, that it couldn't hold above it. That's going to be a significant area. But on a counter trend rally, it's looking like it could. And I know that you're looking at the chart. You can feel it with every move that the Dow, that the general market makes of moving higher. Up until this morning, it was actually participating with the market. Correct?
Yes, that's right.
Okay. So now it's made a P. If it doesn't make a new high today above 106.90, and it had an open. It opened at 104 round number, so that's going to be a clue for you right now. If this thing goes above 104.10, I'm going to say to you, at least take off part of your position. And the reason is you can always come back in at any particular point. And that's important to remember. Now, if you're looking at this as a longer-term position, if you had said to me you had got in earlier, back, let's just call it November, at about 108, and it dropped to 86, it went to 85.96 on the 6th of December, I would have said to you, number one, make sure that part of your position always has a trading stop so that you garner some profit, because you've done the work, you've worked, you did the homework, you did everything. Don't give up a gain completely. At least put your stop in so that, or buy stop in so that you get some reward for what you did. That was the bank account is not going to say, oh, naughty Frank, you could have had a 20-point profit. It's going to say, hey, you made a profit, fantastic, bravo, clap, clap, clap. But if it goes against you, that way you've taken some of the profit off, and the other stop can be break even because you've already had a decent gain. You don't want to go to a losing position after seeing a big gain. So I'm setting that aside. Now I'm going to go to the issue involved. It's made a peak D. My 120-minute chart says I hadn't finished doing this. That was a peak F right there. So this goes A, pulls back, A, B, C. I would have expected that there was one more pop to the upside. It doesn't have to do that. A, B, C, D, E. This is peak E at 106.90. It says, yeah, I'm going to be very strict because you've been in a position that did make you some money, if not a lot, and now it's going against you, but not by 3%. It's really in the market, let's face it. 3% we can always make up, 4%, 5%. It's when it's 15 and 20%, it's really tough psychologically. So I'm going to say to you, look, on this position that you have, my eye says that the stochastic at 83% and the MACD is still strong, that it could have another quick pop-up, and the area I'd be looking at is between 108.50 to maybe 109.80, somewhere around there. That's a possibility of a pop-up. 109.74 is the 9-period moving average in the monthly chart, which it's failed to close above since it broke down back in April of last year. So on some part of your position, I will put 104.10 stop, something like that, on some part of it.
Okay.
And then, because you've taken off some of it, if it goes a little higher, because the weekly chart says, if it fails on Monday, if Monday it suddenly starts to break under 101.50, it could really quickly come back to the 99 to 98 area. So I don't want you to miss that opportunity. At the same time, I want to be very strict about the discipline of buy stops. So 104.10, somewhere around there, I would put a buy stop on some of your position. If it closes today below 103.30, I would hold it over the weekend and I say, fine. On Monday, 104.10 again is the buy stop, and then I would definitely not let it go above 105.44 to 10. I wouldn't let it go to the last high, because if it goes above 106.90, it could actually recycle a little higher. You know what I'm saying?
Yes.
And I believe you will have an opportunity. I think you got your eye on the right stock. I'm just not sure that if you got in at 100 or less, that I want you to put. I don't know what tolerance do you have? Would you be able to hold it if it went to 106? If you felt that it really would come back down to 99?
Yeah. Yes. Absolutely. I don't have any problem with that. It's not a huge trade.
Okay, then let's do this. I'm pleased that you mentioned that. I needed to get out the discipline, first of all. What I'm going to make a suggestion then is put your buy stop for half of the position, 1 penny above the high of 106.90.
Okay, fair enough.
And the other position, I would not let it go much higher, but if it just double tops and then starts to pull back, that's what you want. If by the end of the day it goes towards the 103.10 area, then 101.47 would be my downside target. And then let's talk about it again Monday or Tuesday. But I know what you're looking at, but it has had a huge decline since the top, from 165 down to $80. So you can expect that it could have a decent counter trend rally, but it's acting pretty weak on the weekly chart. Historically, this is the smallest move it's had in 4 weeks. In a long, long time. So you got the right idea. Let's just see how you can handle the trade. So thank you for calling. I hope that helps you. And what you really want to see is you want to see by Tuesday afternoon, Wednesday morning, you want to see this underneath 100. Then I think you can feel a little bit of comfort, because it makes the upside resistance very strong. So thank you for calling.
Thank you.
And let's hope we have much warmer weather next week, right?
Yeah. Thank you.
Thank you very much. And that was Brian from Lexington. Frank from Lexington. Okay, now let's go through this, because this is very important. I wanted to just quickly go through those currencies. You remember when I was speaking about the euro dollar, I said that it could go into a rectangle trading range, but it's made a double top. If it pulls back and breaks underneath the 1.3186 area, that was the low of the 25th, we've got to be careful, because it could. I didn't mention that it could have a 1-to-1. I just said that the rectangle formation, when it breaks to the downside, could have a pretty steep move. Well, it's had a 1-to-1 to the downside. I've got this on the weekly as a peak C1 and a peak C2, meaning it could act like a D, but the MACD and the stochastic are still holding pretty darn well. I'm suspicious here of any of the euro pulling back that to the 1.2923 area. That's what I was talking about, if it really broke down right now, because I'll explain why. The dollar is in leg C in the daily, but in the 120-minute chart, it's, I haven't got on this one. It's gone to A, B, C, D, recycled, and A, E, F, G. So it's gone to a G in the 120-minute chart. I'm going to be watching this real closely, and I'll tell you why. The resistance in the dollar, right at this level, I've already drawn this in. I'm not sure if I showed my subscribers this, but that resistance is being tested now. I suspect that the dollar will make a leg D to the upside, but the stochastic's only at 78%. It hasn't gone to 80%. If it doesn't get to 80%, this rally could start to fail. The euro could try to get back. So I wanted to just give the perspective, and as I go to the break, look at this chart of the Japanese yen, US dollar, Japanese yen. Is that spectacular, or is that spectacular?
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So, folks, let's just get back to this. Remember, I was talking about the USD JPY. I said I would not be shorting this. I just see a minor pullback, if any, because it's walking the 9-period moving average. Remember, this is one of the techniques I teach about how you use the 9-period exponential moving average, how you use the 9-period moving average differential in the MACD. But I'd also said that the stochastic at the time was at 95%. I would not short that yet. It's flattening out at the highs. That's really strong. And look at that E from peak D to E has been huge. It's gone from 84 to 88.137. And the cup and handle, the ChapmanWave cup and ladle breakout. Look at that breakout above the 200-period moving average. That is really strong. Absolutely. By early next week, I see some kind of a pullback. 86.44 will be the support. Now, the IWM, I had a whole bunch of emails during the break. IWM has gone to, again, new all-time highs, leg D extending in the daily. Weekly is D/B. My preference right now is to say I'm favoring B, but I got to keep that parallel wave count of D in place. We don't know yet. And that pattern of the cup formation, each cup smaller with a slightly higher high, says higher highs, higher lows, higher highs, higher lows. It's in an up move right now in the monthly chart. I cannot interfere with it, even though the month has just barely begun. So this is very important. That's number one. Number two is you've got, don't forget, you've got, coming up, you've got, I spoke about it a little earlier. And if you're thinking of a show on health, this is the show that you want to listen to. Just a tremendous amount of work being done. And Nick O'Dahan and just with Paige Clark, I mean, they are fabulous together. The newsletter is just great. A lot of information. You get Daryl. Daryl Martin comes straight after him. Then you got Dave White, you got Ken Shreve, you got Tom O'Brien right back here at 3 o'clock to 5. Then you have Dave White interviewed. Man, that guy knows about his technology. It is amazing. So there are just fantastic shows all the way through. Now let's go to this. IWM is looking very good. A question in the den was, what was it? No, I just saw the USD. Okay. And Terry had asked about Facebook. Facebook, I love this chart. If it breaks above 28.88, the weekly is in leg D. With the technicals improving, I've missed it. I promised that we would get Facebook for my subscribers. I missed it. I didn't even get this last bounce, which is great. It's on my list to buy. I'd have to wait now because it's starting to break out. It's looking good. If it double tops here, yeah, I could pull back. 25.76 is 25.85, 25.76 is the support. Now, let's go through the numbers real quickly on the way out. Have a fantastic weekend. Don't forget, my service is the opening call. Go to the front page of TFNN. Check it out. Check out my CD introducing ChapmanWave methodology. Another question. No, I can't get to that. So, the date. Today is the 4th. I should have said at the very beginning. This is the 4th of January, Friday. All right. So here we go. Parameters I'm looking for. If the Dow closes underneath 13,358.30 for 2 days, it'll be pulling back to 13,258. If the Dow closes above 13,430.60 for 2 consecutive days, it's going higher. My target is 13,558. This is what I showed subscribers. No, not that. This is what I showed subscribers. My target would then be by the 10th to the 11th of January, a test of the 13,588 level, if that's the case. If it breaks above that, then we're going to test that 13,661 area. So that's what I wanted to say. And the other thing is, look how to use the VIX index. 13.72. 13.72. You remember what I spoke about in the monthly chart, VIX.X? 13.30 was the last one. It is underneath the 9-period exponential moving average. The MACD is negative. The stochastic is negative. Something horrible has to happen to get the VIX back into the 20s. So I don't think that's going to happen right away. It could happen later. But I suspect we've got a couple of weeks of rally going on here, and I don't want to fight that trend. So thank you for being here. Have a fantastic weekend. Stay tuned for Nick O'Dahan and Paige Clark. I will be back on Monday. And just have a fantastic weekend. Let's hope the weather warms up here in Boston. Bright and sunny and freezing.